Hey everyone, it's Zach back with a new mortgage video. Hope you're all having a happy Thursday. If this is your first time seeing one of my videos, welcome to my channel. If you're a returning viewer, welcome back, where I'll try to demystify all things mortgage related. If you find this content helpful, please like and subscribe. So today I want to talk about, this is going to be kind of the first of two videos. So today I wanted to talk kind of generally speaking about how much of an effect the president has on mortgage rates. And then my second video, I'll talk more specifically about Trump. So the short answer is the president by him or herself does not really affect mortgage rates alone. Now, with the backing of the Senate, House of Representatives, they can have a pretty considerable effect. And there's really two ways they can potentially have an effect. The first is passing policy, and the number two is through appointing the Fed chairman, which does have to be approved by the Senate. So again, both of those things are not really possible without backing from the Senate, House of Representatives. So let's start with policy. So anything that is passed that the market expects to cause inflation in the future is going to be bad for mortgage rates. So things like tax cuts, things like tariffs, things like printing money, things like spending money for an overseas conflict or war, all of those things could potentially affect mortgage rates negatively to some degree, just depending on how impactful the market expects them to be. None of those things are going to immediately cause inflation, but again, the market is looking 7 to 10 years down the line. The same people that buy mortgage-backed securities are typically looking at the 7 to 10 year treasury because that's how long people usually hold a mortgage. And inflation is their biggest fear. That's the thing that drives the rates up, is the fear of inflation eroding the investment. Now, the other piece is the selection of the Fed chair. Now, the Fed chairman has a 4-year term. So it's not something that you can change whenever you want, but the president is the one who selects the Fed chair, man or woman, after their 4-year term. Senate has to agree to it. So the person they select can have a significant impact. They're supposed to be impartial. They're supposed to go off of the numbers, but we've seen through their actions wildly different strategies by different Fed chairmen. In the 70s, the period of stagflation, you had two Fed chairmen, first Arthur Burns, and then for a very brief period, William Miller, who were raising the Fed rate to combat inflation, but a few times, especially Arthur Burns, would cut rates after inflation started to come down, and then it would pick back up. And so they were kind of chasing it. And then Jimmy Carter appoints Paul Volcker, who just spiked the Fed funding rate to a incredible height, especially, considering how we've raised the rates recently, and that's caused a lot of fervor. We've only raised it to like a quarter of where it was compared to what Volcker brought it up to, and that ultimately succeeded in bringing down inflation, even though it caused a recession. So again, the president doesn't really directly affect mortgage rates, but through passing policy and appointing the Fed chairman or renewing the current Fed chairman, they can dramatically affect mortgage rates, and especially if they appoint someone new. Obviously, they're going to be trying to be impartial, but through researching that person's background, they can probably get an idea of how aggressive or lenient that person is going to be hiking or cutting rates. Again, I'll probably shoot another video early next week on specifically what I could see out of the Trump administration. But if you have any questions or comments, shoot them below. Actually, it was a comment in one of my short videos that kind of prompted this one. So keep them coming if you do have any thoughts at all or questions, or always feel free to text, email, or call me. But thanks for tuning into this one, and I'll see you next time.